My dear students, Assalamu alaikum. You are most welcome to my new lecture for the subject of accounting. Today I will start the compulsory one, that is the financial statement of sole proprietorship. I repeat again, I will discuss today for the lecture number 1 of the chapter of financial statement of sole proprietorship or sole trader. This class is applicable for class 9 business studies, class 10 business studies, and also for class 11 business studies students. Okay, welcome back to my new lesson for the subject of accounting. Dear students, you know two maths compulsory from this chapter, that is financial statement of sole trader. In your final exam, that is the board related exam, so you have to learn it at any cost. Otherwise, you have to fall in very big problem to answer all the questions in board exam. Dear learners, at first you have to know what is financial statement and how to prepare it, how many parts of financial statement, what is the format of financial statement. Dear learners, this is Mahmood Hussain, Senior Lecturer, Department of Accounting, English Medium Morning Shift, Rajuk Uttara Model College, Dhaka. From this chapter, learning outcomes. Number 1, able to know the concept of financial statement of sole proprietorship business. Second one, able to solve the income statement or statement of comprehensive income. Number 3, able to solve statement of owner's equity. Number 4, able to solve the statement of financial position. Number 5, able to determine the amount of gross profit or loss, operating profit or loss, net profit or loss. Number 6, able to know about the current assets or short-term assets, current liabilities, that is short-term liabilities, fixed asset, that is long-term asset, long-term liabilities, long-term investment, and other assets, that is indicated as fictitious assets in business. Number 7, this is the last one, able to know the selected items of owner's equity statement. Dear learners, I think you have taken your accounting practice copy for writing about the financial statement in first lecture. Financial statement. What is financial statement? In ordinary sense, a financial statement is a formal record of the financial activities of a business, person, or other entity. Financial statement. In ordinary sense, a financial statement is a formal record of the financial activities of a business, person, or other entity. In broad sense, financial statements are reports prepared by an organization's management to present the financial performance and position at a point in time. A general purpose set of financial statements usually includes an income statement, statement of owner's equity, balance sheet or statement of financial position, and statement of cash flows. I repeat again, in broad sense, financial statements are reports prepared by an organization's management to present the financial performance and position at a point in time. A general purpose set of financial statements usually includes an income statement, statement of owner's equity, balance sheet or statement of financial position, and statement of cash flows. Dear learners, I think you are writing in your copy for knowing, for memorizing the definition of financial statement. Now, at this moment, you have to know how many parts of financial statement. According to the International Accounting Standards IAS 1, we are to prepare a financial statement of which is divided into 5 parts. The 5 parts are: number 1, statement of comprehensive income or income statement. Second one, statement of owner's equity or equity or proprietorship statement. Number 3, balance sheet or statement of financial position. Number 4, statement of cash flows. And number 5, notes and explanation, that is accounting policies. Dear learners, you are watching in the slide how many parts of financial statement. 5 parts in a financial statement according to IAS 1. Number 1, income statement. Second one, equity statement. Third one, financial position statement. Fourth one, cash flow statement. Fifth one, notes and explanation. An income statement is one of the financial statement of a company or of an institution. Shows the revenues and expenses during a particular period. It indicates how the revenues are transformed into the net income. It displays the revenues recognized for a specific period and the cost and expenditure charged against these revenues. The purpose of the income statement is to show managers and investors whether the company or institution made or lost money during the period being reported. The income statement can be prepared in one of two methods: the single-step income statement and multi-step income statement. Single-step income statement is for used for service-related institution or professional firm, but multiple step income statement is used for manufacturing institution or manufacturing organization. Second one is owner's equity or owner's equity statement. The statement of owner's equity is the second report of the financial statement. Its full name is the statement of changes in the owner's equity. This accounting report shows all the changes to the owner's equity that have occurred during the period. These changes comprise capital, additional capital, drawings, and the profit for the period. The third one is balance sheet or a statement of financial position. In financial accounting, a balance sheet or a statement of financial position is a summary of the financial balances of a sole proprietorship. A standard organization balance sheet has 3 parts: assets, liabilities, and owner's equity. The main categories of assets are usually listed first and typically in order to liquidity. Assets are followed by the liabilities. A business operating entirely in cash can measure its profits by withdrawing the entire bank balance at the end of the period. A balance sheet is a statement of company's financial position at a particular moment in time. This financial report shows the two sides of the organization's financial situation, what it owns and what it owes. What the organization owns, called its asset, is always equal to the combined value of what the company owes, called its liabilities, and the value of its equity, expressed in an equation a company or organization's balance sheet shows. Assets is equal to liabilities plus equity. In this statement, there are so many items for recording procedure. Number one, current assets. Second one, fixed asset. Third one, other assets. Fourth one, long-term investment. Fifth one, current liabilities. Sixth one, long-term liabilities. Seventh one, owner's equity. Current assets. These are the assets in the business that can be converted to cash in 1 year or less. Fixed assets. These are the tangible and intangible assets of a business that won't be converted to cash within a year during the normal course of operation. Other assets. There are many assets that can be classified to other assets, that is fictitious asset, and most business balance sheet have an other assets category as a castle. Some of the most common other assets include cash value of life insurance, long-term investment property, compensation due from employees. Current liabilities. These are the obligations of the business that are due within 1 year. Current liabilities include note payable on lines of credit or other short-term loans. Long-term liabilities. These are the obligations of the business that aren't due for at least 1 year. Long-term liabilities typically consist of all bank debt or stockholder loans payable outside of the following 12-month period. Owner's equity. This figure represents the total amount invested by the stockholders plus accumulated profit of the business. Dear learners, I think you have listened very carefully of my speech regarding the different types of statement, including financial statement. Dear learners, you are watching a format for a statement of comprehensive income. It's a summary format for a statement of comprehensive income or income statement for manufacturing concern. First column is particulars, second column amount taka detail, third column amount taka detail, fourth column amount taka total. The first item of statement of comprehensive income is net sales. It's included several items, but now I have given a summary format. Net sales, the first head, the second head, less cost of goods sold. Then we can find out gross profit or gross loss. If cost of goods sold is less than the net sale, then it will be gross profit. But cost of goods sold when is more than net sale, then it will be gross loss. And then after finding out the gross profit, then less operating expenses. After deducting operating expenses, that can be got operating profit or loss. After finding out the operating profit or loss, add other incomes, that is non-operating income of business, and then less other expenses, that non-operating expenses to be deducted. And then we can get the net profit of the amount for any business. Dear students, I think you have written the summary format of income statement. I will discuss each and every item one by one and continuous lectures or lessons. Second statement is statement of owner's equity. You are watching a statement of owner's equity. Same formats is given below. You have to know statement of comprehensive income, statement of owner's equity, statement of financial positions format. Essay. Statement of owner's equity is started with capital, that is opening capital from trial balance. It can be added additional capital, it can be trial balance or adjustment, then to be added interest on capital from adjustment, general reserve or reserve fund to be added with capital. If net profit is available from income statement, then to be added with capital. Another one, personal payment for business by owner, then it is to be added with capital. And total adding items that can be deducted. First item is drawings, trial balance or adjustment, cash drawing, that is, and goods drawings to be deducted from the total capital. And then interest on drawings, if it is in adjustment, it will be deducted from the total capital. Income tax from trial balance or adjustment. Life insurance premium, trial balance or adjustment. Personal expense of owner from adjustment. Total deducting item is to be deducted from the total capital. Then we can get closing capital or capital closing or owner's equity. Dear learners, I think you have written in your accounting practice copy for the format of statement of owner's equity. The first one was owner's equity note. It is an income statement with the summary format. Now I can go the last one, the statement of financial position. You know, it has two parts. First part is assets, second part equity and liabilities. So we can start format of a statement of financial position. It's a permanence method. It can be remembered. Three methods are available for preparing a statement of financial position. First one, liquidity method. Second one, permanence method. Third one, mix method. But at this moment we are followed permanence method for the benefit of company's financial statement. But at this moment we are preparing statement of financial position for sole tradership business. At first, assets. Totally 4 heads are available in asset side. First one, fixed asset. Second one, long-term investment. Third one, current assets and advances. Fourth one, fictitious asset, that other asset. In fixed assets, several items are written. Goodwill, less amortization are written off. Lease asset, machinery and other fixed asset, less accumulated depreciation. Long-term investment, it can be included percentage of investment, savings paper, security paper, commercial paper. Current assets and advances, interest receivable, unused stationery, closing stock and other current assets. Fictitious asset, preliminary expenses, underwriter's commission, etc. Total assets. Dear students, you are watching. Totally 4 heads are available in asset side. First one, fixed assets. Second one, long-term investment. Third one, current assets and advances. Fourth one, fictitious asset. Second part is equity and liabilities in the statement of financial position. In this part, 3 heads are available. First one, equity. Second one, long-term liabilities. Third one, current liabilities and other provision. equity, that is from owner's equity statement or new calculation. If it is not available in equity, then you have to calculate in new way in this statement. Second head is long-term liabilities, percentage of loan, bond, debenture, bank loan or mortgage loan. It's included in long-term liabilities. Current liabilities and other provision, bank overdraft, accounts payable, source tax and other current liabilities. This amount are total equity and liabilities. Dear students, from the rules of accounting equation, you know assets is equal to liabilities plus equity. If in statement of financial position assets taka 10 lakh, then it will be equal to liabilities and equity taka 10 lakh. The students have given 3 formats for preparing a financial statement. I think you will follow it and you have understood in all space of this lecture for the subject of financial statement, for the subject of accounting. Dear learners, thanks for being today. Allah Hafiz.